All right, let's talk about BlackRock. I mean, the biggest name on Wall Street already changed the game with its spot Bitcoin ETF, right? But what they're doing next? Well, it's not just another product launch. This is a fundamental shift in how the financial world is starting to see Bitcoin itself. So, let's break it down.
Here's the single most important thing to understand. BlackRock is literally turning Bitcoin into a Wall Street income product. You heard that right. They're taking this asset, known for its wild volatility, and packaging it into something that looks and acts a whole lot like a traditional stock that pays you dividends. This is a massive strategic pivot.
So here's our game plan for this explainer. We'll start with BlackRock's new filing. Then we need to quickly look back at their first ETF, IBIT, because that's how you'll see just how different this new one is. After that, we'll dive into the engine room, the covered call strategy, to see how it actually generates income. And we'll wrap it all up with the big picture, what this means for Bitcoin's future.
Okay, let's get right into it. Part 1, BlackRock's next Bitcoin move. And just to be clear, this isn't just an update. This is a whole new phase for institutional crypto.
So the big news that got everyone talking dropped in early 2024. Reports started flying from people like Bloomberg's Eric Balchunas that BlackRock had filed an S-1 form with the SEC. Now, that's the official paperwork for creating a new security. And the name they chose says it all, the iShares Bitcoin Premium Income ETF. Those keywords, premium and income, signal a completely new strategy.
Now, to really understand why this is such a huge deal, we have to rewind a little and look at the foundation they already built. Let's talk about phase 1, the IBIT ETF.
I went and pulled this quote directly from the official IBIT prospectus because it's so important. It says, the trust is a passive investment vehicle. The trust will not utilize leverage, derivatives, or any similar arrangements. They couldn't have been more clear. This is a crucial point. IBIT was designed to be simple and to do one thing and one thing only. And that one job was simply to track the price of Bitcoin. That's it. That's why everyone calls it digital gold, right? The entire goal was to give investors a straightforward, no-frills way to get exposure to the asset. No complex strategies, no financial engineering, just pure passive holding. And that brings us to this new ETF, which is basically a complete reversal of that whole philosophy. We're watching a shift from Bitcoin as a simple store of value to Bitcoin as a productive, working asset. This table really lays it out perfectly. On the left, you have the original IBIT. Its goal is to track the price, and the strategy is to passively hold. Simple. But on the right, the new income ETF has a totally different mission, to generate regular income using an active option strategy. We are literally watching Bitcoin get reimagined from a store of value into an income-generating asset. So the key idea here is that the goalposts have completely moved. It's not enough to just own Bitcoin anymore. The new goal is to make your Bitcoin work for you, to have it generate a consistent cash flow. It's the exact same logic you'd apply to a dividend-paying stock. So you're probably asking, how do you generate income from an asset that doesn't pay a dividend? Well, the answer is the engine inside this new ETF, a classic Wall Street strategy called a covered call. So what the heck is a covered call? It sounds complex, but it's actually pretty simple. You own an asset, in this case, Bitcoin. Then you sell someone else the right, but not the obligation, to buy that Bitcoin from you at a set, higher price in the future. And for selling them that option, you get paid cash right on the spot. Let's walk through the 3 steps. First, the ETF holds the underlying asset, which are shares of the spot Bitcoin ETF IBIT. Second, it sells call options against those shares, basically selling a promise to sell its Bitcoin if the price goes up. And third, and this is the magic part, for selling that promise, the ETF immediately collects a cash payment. That payment is called a premium, and that premium is the income. Now, there's no such thing as a free lunch on Wall Street. There's a trade-off. By selling that call option, you're agreeing to sell your Bitcoin at a certain price. So if Bitcoin has one of those massive, explosive rallies, you're going to miss out on some of that huge upside. But in exchange, you get regular, predictable income from those premiums. It's a strategy that's all about cash flow, not about chasing home runs. Okay, so let's zoom out, because this isn't just about a new product. This is a major chapter in Bitcoin's evolution and its integration into the global financial system. So why does this matter so much? Well, here's why it's a huge deal. First, it opens the door for a completely new class of investor.
think pension funds, insurance companies. They're really conservative institutions that need steady cash flow. This product is practically built for them. Second, it rebrands Bitcoin itself, shifting it from being seen as a purely speculative gamble to a yield-generating financial instrument. All of this just weaves Bitcoin deeper into the fabric of traditional finance and could seriously accelerate institutional adoption. You know, this product is really tailor-made for a specific mindset. It's for the fund manager who looks at Bitcoin's wild price swings and says, there's no way I can just buy and hold that. It's too risky for my clients. But if you go to that same person and offer them a structured product that turns that volatility into a steady paycheck, well, now that's a whole different conversation. So we'll leave you with this final thought. For years, the story has been that Bitcoin is digital gold. But BlackRock is writing a brand new chapter. So the real question is, what happens when the world's largest asset manager starts treating Bitcoin not just like gold, but like a dividend-paying stock? The entire financial world is about to find out.